Okay, I'll be starting in 3, 2, 1. Panel, we've realized in Africa there's this constant expectation put on the continent to want to compete with the West, even though it leads to a lot of people being excluded and even though it leads to a lot of people not being considered, right? What do we get when we get this motion, and why exactly are we having this debate, right? We're having this debate because we need to interrogate whether or not African infrastructure in Africa as a continent ought to invest in cryptocurrency, right? Whether the rise of this cryptocurrency and crypto investing is something that needs to be valid, right? I think cryptocurrency is a currency, it's a digital currency that exists on your laptops. That is to say, it is not physical money that you can actually go to the shop and buy with, right? We think the likes of Bitcoin exist as code, which means you have to be really, really smart in order for you to mine your own Bitcoin, right? The larger society of cryptocurrency looks like people just trading it amongst themselves because of how difficult it is to actually mine it, right? And it's something that involves a lot of maths and a lot of science and a lot of things that people don't quite understand, right? But secondly, we think it also exists on online blocks, right? I think people trade online for different things that exist within the online world, right? It isn't something that it actually holds weight within the physical environment, right? Then cool, the context of Africa and how it's likely going to look in Africa, right? We think the African continent likely has an interest to want to invest and create or invest a large rise in cryptocurrency because of this need to want to compete, right? Because they see that, listen, Bitcoin is actually gaining some sort of traction, right? We see that Bitcoin actually is being traded for lots of money. African companies are likely going to create apps and create places or avenues for Africans to invest in cryptocurrency because they want to compete, because they want to be in that space, right? Why is this want to compete inherently a bad thing? This want to compete by principle is a bad thing because it leads to a lot of African people being left behind, right? Africa as a continent has a history of colonization and has a history of not having the right infrastructure, right? It means that then you can't expect Africa to exist on the same space as Western places if other people don't have the knowledge of how cryptocurrency works, right? If some people don't have laptops or things that they need in order to invest in this cryptocurrency, we think this is something we ought to regret, right? So what does this rise look like, right? It looks like more and more people using cryptocurrency. It looks like institutions wanting cryptocurrency, right? An analogy is very simple. When we go to Cape Town and we see how many places have card-only shops and only want you to use your digital card, we see that this is the same type of rise that's going to be occurring with cryptocurrency, right? Some institutions are going to want cryptocurrency and some people on the ground are going to want to start investing in cryptocurrency because the rise of it in Africa likely leads to a pressure for people on the ground and people or institutions and corporations to want to start using it, right? This is what we're opposing. This is what we think is harmful. Cool. Why then do we think that this expectation and the rise is harmful? We think when we look at the way that Africa exists currently, number one, I'll take you in a moment. Number one, we think the education around cryptocurrency and computer science is one that isn't that amazing, but two, that isn't that accessible, right? When we look at the info slide and we see that these companies are going to start creating mobile apps, we think if we allow the larger society to have such easy access to cryptocurrency, compounded with the rise of that becoming important in Africa, we think this is likely going to be detrimental because people who don't have the knowledge of how cryptocurrency works are going to feel pressurized to invest in cryptocurrency so that they can keep up with how the economy is changing within their state, right? This is what the rise does, and this is what the accessibility does, right? We think the infrastructure and the groundwork in Africa is not where it needs to be for African people to genuinely engage with cryptocurrency in a way that doesn't make them vulnerable. Because when we look at the way that the world currently works and the way that the economy in African states works, people are being left out. Cape Town is a perfect example. Digital nomads come into Cape Town with their currencies and start trading amongst themselves, right? This means the people of Gugulethu, the people in the townships and the indigenous people of Cape Town cannot keep up, which means they are falling into worse and worse structures within Cape Town, right? Which means Cape Town only becomes great for those who are in the digital world. Cape Town only becomes great for those who have a lot of money and becomes worse off for the people that actually existed in Cape Town. The analogy is simple then. If cryptocurrency continues to rise in Africa, what's likely going to happen is the people who have the knowledge and access to that knowledge are likely going to be better off than the people people who don't, the inequality is going to be unmanageable. CO.
Yeah, I'm genuinely lost. Where is the expectation and why are they competing against the West? Why can't they just make their money and go?
Here's the problem. The rise of cryptocurrency in Africa exists because there is an expectation. This is what you're not understanding. It wouldn't just rise just because, right? The expectation is there because African places want to compete with the West either way, right? This want to compete with the West is detrimental because we don't have the infrastructure to compete with the West. I've explained to you then how the rise thereof in essence is something we oppose because it's going to create inequality within Africa because a lot of people don't have access to the information that you need in order to confidently and genuinely engage with cryptocurrency, right? So how does this link to opposing, right? I've proven to you that the harms exist because of the fact that Africa in and of itself doesn't have the right infrastructure to deal with this, right? And the people who do have the right infrastructure are likely going to lead to an inequality gap. Canal is going to show you how even if we do meaningfully engage with cryptocurrency in Africa, it's going to lead to larger economic harms because of the fact that it isn't physical money, right? Because of the fact that it doesn't actually circulate a physical economy. We think the African economies in and of itself are not in the position for people to be investing in money that isn't actually there. If you opt for the house that cares about the African people, if you opt for the house that doesn't want Cape Town to become a continental issue, then you opt for government. I've never been more proud.
The House thanks the Prime Minister for that fine speech. Welcome the Leader of Opposition to the Opposition. In this case, we hear.
It's alright if I time myself.
Go for it.
Alright, are we ready? Okay. Panel, with the rise in the use of anything, regulation becomes important. Please take note of this, because in the age of the tech boom, when computers became more important to society and people were engaging with it, government saw that there was an incentive to create laws and regulations to regulate this industry and to protect and cater for those excesses. What does this look like and what does that mean? Once, there are going to be laws that are going to cater for some of these excesses. So for things like fraud or for things like exploitation, they are equally going to be catered for. But secondly, with the rise of anything, it's going to lead to increased sensitization and socialization of the people. What that means is that there are going to be continuous campaigns in schools, online, on social media, that's going to be sensitizing people about how these apps work, how these things work, the things to look out for, the things, what scams look like, what fraud or all those different things look like. But thirdly, there are going to be authorities that are going to be taking care of the excesses. This was like things like police or IT services and law enforcement organizations, etc., that are going to be looking at these things. But equally, there will be policies that will be requiring retail or crypto investors to issue things like notices or terms and conditions, or have customer service professionals that are actively going to be online to be able to make sure that people actually know what the fuck they are actually doing in that particular regard. Second thing to note, competition leads to a number of things, because note, there is Binance, there's Chaka, etc. Competition leads to an incentive to make better and more safe products. What that means is that because Binance is competing with Chaka, they do not want things like fraud or exploitation to actively hamper people engaging with their products or engaging with them in that particular regard. Another thing for us to understand then, with regards to my framing and characterization, how would these investment platforms operate in Africa? One, You do not need a supercomputer, that is your personal supercomputer, to mine coins yourself or to invest in or to engage in retail investment. These corporations like Binance and Chaka have the infrastructure already. All they do is that they provide you with a platform, whether it's online or through an app, to be able to engage with that infrastructure to begin with. It's for the exact same reason that banks work. You don't need to have a reserve in your own home to be able to engage with the bank. They have the infrastructure. Their job is to make it accessible to you. That's how it's going to happen. And second, you need to understand that the people that are important in this debate are people that want to invest and have the capacity to invest. Note, there are two alternatives. You either go with retail or crypto investing, or you go with traditional investing in the form of venture capitalists or banks, etc., etc. What that means is that in either world, the poorest people aren't going to have the ability to engage in crypto in any way. It's probably going to be the richest people in that particular regard, or people in the middle bracket or middle income people. And my second speaker is going to explain why prioritizing the middle income people anyway is still going to trickle down to the poorest people in that particular regard and all of that. But why then is crypto or retail investing good? I'm taking a lot of time to frame and characters. We need to really understand some things in this video so that things don't run before I get to my first case. Please note, why then is crypto or retail investing good? And in doing this, I am going to be comparatively explaining why it is inherently better than other alternatives. I think the most likely alternative here is going to be traditional investing in the form of banks or venture capital firms, etc., etc. One, blockchain technology exists, like she says. What that means is that it's a lot safe, and it's a lot safer, and it's a lot more secure. What that means is that it's unlikely for people to tamper with the code, because if you tamper with the code on your end, it's not going to be reflected on the blockchain register across board. Makes it a lot more safe, makes it a lot less likely that people are going to be scammed or frauded in that particular regard. But secondly, the biggest cryptos like Bitcoin, etc., are usually pegged to existing currencies like the US dollar or gold or some infrastructure or whatever the situation is to make it more stable. That's why we have things like stable coins. Thirdly, there is no upfront cost as compared to traditional investing. What that means is that I do not have to go and engage with a venture capital firm and pay high prices in fees or entry fees or bonuses, whatever the situation is, to be able to engage with those traditional infrastructure in that particular regard. What that means is that in the world without the rise of the crypto or retail investment or retail investing, it makes it a lot harder for middle income people to be able to invest and gain that supplemental income in that particular regard. I'll be explaining more later on. But equally, with the rise of retail investing, it's going to lead to more startup companies, more companies that are already establishing themselves in Africa, etc., etc. Very simply, there's more job opportunities in that particular regard. That's why CAP member Elisha can now be running all of the things that he's doing with OpenAI and all of that, and all those different situations. Let's then get to my first case on what. Yes, before time goes on.
Okay, cool. You already say that poor people won't engage in crypto, and you say that rich people will engage in crypto. We're not against crypto as a currency. We're saying the rise of it is bad because it's going to put pressure on those who cannot. Speak to that.
If you cannot engage with it, then you are not important in this debate, because note, the only way you can invest is if you have the capacity to invest to begin with. I need them to explain why a pauper or a poor person has the income to be able to invest, because note, the people that invest are people that have supplemental income or they have disposable income. If they lose, because note, investing is a risk. If they lose that money, it means that's going to affect them. They need to explain why somebody who is living paycheck to paycheck is not going to invest in food or school or electricity and things that are important to them and go and invest in Binance or wherever that situation is. Makes no fucking sense. Let's then get into my first case in that particular regard. Panel, please note, the crypto industry is extremely profitable and it's a very big industry. What is the evidence of this? Bank of America, Goldman Sachs, etc., are constantly diversifying into these areas. Two, global billionaires like Elon Musk and co are actively investing in this industry. Three, we've seen state practice in the form of El Salvador and co making it their actual currency. Even in Africa, multiple nations like Nigeria and Ghana have actively pushed for retail or crypto investing in that particular regard. It is thus important that as the development of retail or crypto investing is picking up in the West, its development in Africa must be commensurate with the development in the West. Why then is that the case? One, because their benefits are plentiful and their harms can be greatly catered for, as I've already explained to you. But secondly, it is important for us to undertake this particular action because at this point in time, we can create systems and infrastructure to ensure that some of the most vulnerable people can see some upward economic mobility at a moment where its development has not reached the umpteen degree and becomes too difficult to regulate or too difficult to manage. Proudly,
Thank you, Leader of Opposition, for the final speech. Welcome the Deputy Prime Minister to the debate here.
I'll be starting in 5, 4, 3, 2, 1. Panel, I'll start from OG is actually pretty clear. 1, we want financial protection. 2, we don't want financial exclusion when it comes to the poor people within Africa, right? And it's not necessarily to say, oh, we suddenly expect the people in Guguletu or the people in rural areas of Accra or Kenya to suddenly have access to cryptocurrency, because we're not dumb, panel. We understand that there are some barriers to entry to cryptocurrency in the first place, and we're likely talking about the middle class like they are talking to. When we're talking about the financial exclusion that the rise could potentially have on the African economies that want to introduce it, we're talking about the financial exclusion of people that cannot access crypto in and of itself. I think Fumani already establishes why this is unlikely. It's not something that you can tangibly access, but then 2, if you can tangibly access, you block out a lot of people from actually getting things like these investments, like these bonds, like these things that have a high yield on investment, leading to some sort of financial freedom, some sort of financial profit. And when you block out those people, you create a further divide where only the rich that can access crypto trading, that can access this form of retail investment, can get that access, can keep that access, and consolidate that form of the financial market to themselves, while the people who wouldn't have access to cryptocurrency in the first place, but are probably hustling to, invest in something, to buy bonds in order to financially liberate themselves, have a higher entry access, and so you create a huge divide. I don't think in principle, if you want equality and financial freedom for Africans on the ground, then that is something that you cannot necessarily stand for. So financial exclusion we don't want, but the second thing is that we find that there's going to be a net long-term economic harm if we go ahead and have this crypto thing. Plus, let's look at what OO tells us in the debate, because they tell us practically 2 things. Upward economic mobility can happen. I still don't necessarily understand why. They tell us then that crypto is cool, right? Sure, cryptocurrency may be cool. Why is it not cool within a specific African context?
Sure.
The thing with cryptocurrency, and not the lie that they are telling us when they're saying that, okay, it can be backed up by traditional money in order to give it some value, is that that's not the nature of cryptocurrency. Cryptocurrency practically works on code that has an arbitrary value to it. That is to say, it's simply there based on demand and supply, right? It simply exists on blockchains that are furthered by the way in which people within those niche spaces are practically engaging with Bitcoin. Even if you want to go ahead and align it to some sort of currency, you're likely still tying it to a dollar, you're still likely tying it to something that isn't the actual African currency. Why is this going to be likely bad on the ground? Let's look at the nature of these. Okay, before I do this, Seal.
Yeah, there's a lot of focus on only crypto. The nation says financial assets, which means non-blockchain based stuff like stocks which don't need crypto and bonds are equally in the debate, and there's nothing from which in that.
This house opposes the rise in retail/crypto investing in Africa. Wait for me to deal with you because apparently you don't know motion analysis. But here's the thing with crypto in and of itself. The thing is, it's a decentralized thing. There isn't a regulation that you can genuinely put on it in order to protect people. That's why in Nepal, there is a $1 trillion scam that literally led to Chinese people and American people losing trillions, guys, trillions, read your news, in investments because of these so-called cryptocurrency scams. It's a real thing. You cannot necessarily guarantee financial protections right now, especially if we're seeing a rise correlating with the financial detriments of people in the real world. It's going to be worse for Africans that genuinely just want financial freedom, but that cannot get it and that are likely to get scammed. The other thing is that the problem with crypto, and okay, let's look at the nature of the things that we are investing in the first place. We're looking at bonds. We're likely looking at it like typical business investments that are likely to yield long-term rewards. We're looking at commodities. We're looking at financial assets, right? These aren't necessarily things that you can simply create. These are probably things that you have a hard time attaining. You can't, the way in which you need to engage with them is supposed to be in a very careful way if it's going to have any economic impact that is going to be meaningful. With crypto, you cannot necessarily tax those purchases. You cannot necessarily go ahead and do things in order to genuinely get some sort of injection return on it. It simply stays between the buyer and the seller. Why is that bad if we're looking at the context that is only like the rich middle class or the upper class that have access to it? It means all the resources that they are funneling towards these financial assets, and the one mechanism that we have in ensuring that the purchase of these financial assets still go into like taxation, that still go to the government so that they can carry out their functions isn't there. What does that mean? You're having a lot of high-value goods, high-value investments being made, losing a fiscal budget, decreasing the capacity for the government to genuinely do things that could have helped the people on the ground in the first place. But then too, at a point in time, you don't have useful fiscal measures. You don't necessarily have things that could genuinely be used as an economic control. The other thing is the nature of cryptocurrency in and of itself. I already told you that we're seeing a rise in the fact that people are genuinely being scammed out of it, right? It could be simply by malicious intent because we have hackers, but it's also when we're looking at the fact that there's a rise in AI technology that's getting smarter, that is being leveraged worse, and the AI sophistication has led to it simply stealing billions and billions. I don't necessarily think that if we genuinely want to protect Africans that just want to go ahead and have a sure investment in order to get themselves a better economic position, that we want to genuinely facilitate a rise in something that leaves them worse off, that is quite dangerous, and that cannot be regulated by the nature of the thing itself. What practically then becomes the way up within the opening half? Because genuinely, OO has done nothing but tell us that it's simply easy access. I don't think easy access in principle is valuable if it's going to lead to more harm on the ground, like the exclusion of masses of people from getting like economic independence, or the potential of people being scammed. But then secondly, the economic harm that could genuinely arise. And with that, I am proud to propose.
Thanks to the really time is just about one speech. And I'll welcome the deputy leader of opposition to the debate here.
is important for us to really understand what this debate is about. What is retail investment? This is a form of investment that is accessible, easy to engage. So this looks like buying and selling commodities as a non-professional. What then is the comparative? This looks like professional investment, where you have to pay professionals to invest for you, or you must have some sort of detailed economic knowledge to be able to invest, right? That is the comparative that we have in this debate. What this debate is about is should the African continent oppose the rise of this form of retail investment in our African economy? That is what this debate is about. This means that in their world, we will equally have cryptocurrency, we equally have retail investments, whether buying or selling commodities, selling financial assets, etc. The question then is, should Africa engage in this form of booming industry in the status quo? So panel, also, what does this rise actually mean? Because you don't get it from the rise. We think the rise means that there is competition in the market. Because now we have Binance, we have Chaka, we have other retail investment companies that want to tap into Africa's market. And in order for people to trust you or want to trade on your platform, you have to increase things like information, accessibility. Your brand has to be visible, or there must be brand visibility among the youth in Africa or people, your target markets, right? What then does this mean? This means that there's high financial literacy in Africa. This is one incentive that you do not get from them, because in their world we have the traditional form of investment that is on the rise, and that is the form of investment that people know about. That form of investment is one that locks people out of investing, because that one has a lot of barriers to entry. I'll be explaining to you how even their world, they don't solve the problem of barriers to entry that they argue in this debate. So panel, what then is our extension before I do direct responses? One, we think that this rise of retail investment gives African youth the ability to self-preserve. What then is this? We think that over the years, African youth have been failed over and over by traditional investments in industries or governments as a whole. This looks like low investment rates, because rates are set by federal bank or national bank, which is very low because they want to regulate the system. This looks like even their world is not really assured, because notice in Ghana, we had the haircut where the government had to cut down the investment that people had invested in bonds. So they cannot say that, oh, the traditional form of investment is the most secure form of investment in the status quo. Panel, also notice there is high unemployment in Africa. African states have high unemployment rates. Each year, governments promise like they do that they will want to deliver etc. But it doesn't work. Bad standard of living generally in the states. How then does retail investment solve this problem, or why is this good? We think that it provides them the ability to generate wealth themselves. How? We think that because the crypto industry is a large one, and in our world, because of the rise, has become highly accessible. We think that people that would have been locked out of engaging in the traditional form of business, because one, they do not have enough money to pay the best professionals to invest in the best stocks or buy them the best form of financial assets, will now have the ability to invest, because now it's just an app. You download the app, you read through the terms and conditions, they are high financial literacy. At least you are able to invest, you are able to at least generate wealth or attempt to generate wealth for yourself. This is something that you do not get in their industry, you do not get in their world, because they are opposing the rise of retail investment. Panel, why do we think that this principle is justified? We think that when a system has failed you over and over again, we think that people should be given their chance to engage in other forms of system. What then is the other forms of system? That's the rise of retail investments in African states. We think that African states should not continuously wait and play catch up in the status quo, because this is what has happened over and over again. The tech boom, Africa has to wait so many years in order to play catch up. We think that playing catch up is not good for the African states, because now they do not have this. This will mean that they did not engage with the industry when it was booming, meaning they do not have the regulations to cater for the excesses. We think that in our world where there is a rise, we think that there is an incentive for the government to put in structures, to put in regulations, etc., to make the economy better, because they know that now people are engaging in that economy. What then is the impact? We think that because of the rise, there is competition in the industry. This means that we have more people, more retail investment companies, Chaka, Binance, Luno, that equally want to tap into the market. We think that competition is inherently good, because it checks the excesses, because this means that people are more likely to engage in the form of platform that gives them the best utility. This is something that you do not get in their world, because in their world, you are stuck the traditional form of investment, banks, Goldman Sachs, etc. That is highly limited. That is highly limited and there's a lot of barrier to entry. Now to some direct responses before I move on. Yes, CG, sorry. So one, their biggest case is that people do not have knowledge of cryptocurrency. Capitalization on the rise takes out this argument because we've already proven to you how the rise means that there's more financial literacy. These brands want people to engage. The only way people will engage is when they are known and it's when they explain the concept to them. So this is out of this debate. Their second argument is that there's an expectation on African states. First of all, we reject this premise. We think that this industry is booming in Africa because Africa has like a youthful population. Africa has an untapped market, and these companies want to tap into the market. We don't think Africa is doing like following some expectation, etc. They also said their biggest case is also that this money does not circulate. Notice how this is flawed because these companies are companies in the States. They pay taxes. If you want to purchase something, you would have to buy like things. You have to pay taxes. As you are buying things, you are paying taxes. As you are transferring currencies, you are paying like taxes to the government. We think at the end of the day, this money circulates in the economy and it boosts the economy as a whole. Then on their case on how people are blocked out, check your sheets. They don't prove to us how people that are blocked out in their world out of a study will engage in the traditional form of investment. At least in our world, we provide you the opportunity to attempt to generate wealth for yourself because of how accessible it has become. Because of the fact that now you know that you can download an app or you don't need to pay huge sums of money in order to traditionally invest. That is something that you do not get in their world. We think that in terms of like comparison, our world is better for people that wouldn't have invested or wouldn't have been able to generate wealth for themselves. Panel, the biggest question in this debate is, has this rise created any utility for African states? We think that yes, this rise has created utility for African states because now people are able to self-preserve, at least attempt to self-preserve. We think that in our world, we create like structures to make sure that this sector is also good for African states. This is something that you do not get in their world when you oppose the rise of retail investment. Probably.
The House thanks you all for that speech. Welcome to member of God to begin the close talks here.
If I may. In this opposing motion today, we're not here to give you a model. We are here to just try and prove that if you add up all the bad and the good of the rise of retail crypto investing in Africa, is it worth opposing as a government or is it worth supporting? Now, in our case, we say that it is worth opposing. Why? Because we see that in the opposition's case, they came here and tried to encourage you about how it is better where investors don't have to pay maybe some company entry fees. But panel, I need you to remember that this is investing. There are risks involved. But as an investor, would you see the need to multiply the risk tenfold? It is rather not necessary, because why would you try to increase the risk? Looking at the government case, the government came here and tried to shed some light on the issue of education, on cryptocurrency, on crypto investment, on crypto, where it is not, okay, I'm sorry. The government came here and tried to talk about where education is not accessible, where investors will now be forced to invest in cryptocurrency or in retail. Us as the closing government, we come with our own perspective and say that when people are forced to invest, scamming is high because some of these people do not have the knowledge of cryptocurrency at all. Now, when this happens now, they have to deal with agents, they have to deal with other people that have to do it for them. And when people do it for you, there is a high chance of scamming and there will be no one to be held accountable because this is an informal sector in some sort of a way. Now, moving on, we get that from the government that there will be a divide between the rich and the poor. And then as the closing government, we come with our own perspective where this divide will cause social disadvantages such as marginalization, such as the unfair treatment of the other class by the superior class. This will all be caused by the divide between these two classes. We as the closing government, we come again with our case where we say that yes, cryptocurrency is good in the sense that it might offer freedom. But such freedom is bad in the sense that there will be lack of stability, maybe in the markets, and there will be huge fluctuation that can lead to the loss of funds, unplanned fluctuations and decreases in profits. Because some of these owners of the stocks market might actually manipulate the sales such as to be able to get profit in their own way. The opposition came here with the notion about where employment can be generated through retail and cryptocurrency. Where you can generate money to some extent. But mind you, some of these people don't have the knowledge. This might be an informal sector.
Yeah, so I don't get this. There's someone with no laptop who has no knowledge and is poor, but somehow that person gets exploited.
It is difficult to exploit the rich, but it is very easy to exploit the poor. This is why even an example where most people that actually do betting are the poor. Therefore, the poor are in need of money. So when you expose a good deal like cryptocurrency, where you'll be flagging good where you'll be flagging good results that can be generated from as little as nothing, it is easy to be pulled off. It is easy to be submerged in such a thought. Therefore, scamming will lead to its highest peak in this essence. The lack of laws that are there to govern the world of cryptocurrency. Now, we as the government, we oppose the rise of this retail or crypto investing in Africa because there is no actual laws or regulations that can actually penetrate into the informal sector that can lead to the securing and the safety of the funds. Now, what the opposition is simply standing for is lack of security, where they are saying that everything else matters, but they are not up for security. But in the world of investment, we are all about security because security is profit, because with security, we can be able to generate funds and we can be able to move towards a better future for the economic development, maybe even for the social, for the social impacts. Because economically speaking, to be able to invest, it needs to be secure. For you to be able to make a profit, you need to have security. This is why in companies, they have some sort of policies that will stop them from scamming, from running a loss, and many things. So, I raise my case.
Speech, we welcome the member of Ultimate to the debate here.
starting in 3, 2, 1. This debate will be based around the mistakes and failures of every other team to show why the team in closing opposition wins. Let's start with opening government. Opening government's first thing is the tricky framing language and the use of language. They tell you things like, one, when this happens, it makes Africa compete with the West. One, why do Africans need to compete with the West? We do not know how. How do they compete with the West? And for what reason? Which is the reason why we should not support the rise. They do not tell us. All we know that it is bad, and that is the extent of the argument. Second thing, their team is rid of contradictions. You know why? One, they tell us, and verbatim from the first speaker, that a lot of people do not have the infrastructure. They use examples like laptops, they use examples like access to internet. Second speaker mentions a lot of things such as certain people are poor, and then what they say is that these people are going to be exploited, they don't have enough knowledge to use these things. The problem is that there's a gap between the claim and the impact. If people do not have laptops truly, if people cannot access the internet, and if people are that poor that they cannot even get sustenance, I do not know where they get that money or the knowledge to actually get those things, to engage in them before they are being exploited. In their own case, without anybody responding to them, there's a lot of problems that needs to be addressed in their debate. The last thing then they talk about, which does not get any engagement, is that this creates new inequality gaps, because the case they say is, for example, somebody's in Cape Town, they now use a lot of like cryptocurrency, etc. Other people don't use it. So certain people are getting money, other people are not getting money. Like people who are in rural areas in Accra and a town they mentioned, I can't mention that. The issue is simply, honestly, why do we care? If people have access to make money and better their lives, and certain people cannot make it, it's not a reason to not support the rise of something. It's people literally not having access to opportunities. The best thing in that regard is rather to support the rise where there's more education, more access, etc., to make sure they bridge it. The truth is the world evolves, and these things need to happen for people to get better. That is enough for opening government. Let's then to the counterfactual, because they say that there's a lot of interest that exists. The problem here that lies is that people still have interest and people want to go there. Let me help their case. Do you know why the expectation is there? Because they see it online. They see people booming, people traveling, people living their best lives because they're able to invest in crypto and invest in other things and make money. The problem is that when there is no rise, when there's no new apps, no new ways of accessing these things, etc., that is when you leave them to people who are scammers. You leave them to people like apps who are in no competition to get better. That is in the world where they truly get exploited on our side, not outside. On our side, they get to make more money, etc. Let's then come to these guys in opening opposition. The issue with their argument is that their best argument lies on a fiat. And let's explain why this is critical for the debate. The debate is not a this house will debate where there's a fiat for someone to propose something that gets passed. It's a this house opposed debate. So if you want something to work, you need to mechanize how that works. So it is true that when there's a lot of people engaging in something, probably the competition comes, probably things like education, etc. come. But he cannot fiat that. They needed to prove why, because there's interest, that should happen. Just because there's interest doesn't mean all those things come. And that is why we fill that down and take credit for that thing. Firstly, why do you think the rise leads to much more accessible means of getting this? One, there's a lot of markets that people are going to get. You know, when you create an app for people to invest in, more people are coming there. That is the incentive missing there. You just don't fiat that there are new things that happen. You show that there's a market and people are much more willing to engage. I'll take in a bit. Secondly, competition and how that happens. You don't just fiat that because people are interested, there's competition and everything good. No, people try to outdo each other. Three things. One, individual engage in things such as the ease of use, making it much more easier and natural for people to have. That is why the best applications have better UI, user interfaces, better UX, etc. compared to others. Things like quickness of withdrawal. For example, in the past when you use Binance, you get your cash back after 7 days when it's being properly passed through. Now with new apps like Chaka that is being used in East Africa, you can get your money in 1 day, which means that competition creates ease with which you can remove money. You don't just say competition and say it works, you prove structurally why that competition mechanistically gets those things that you do. They don't just say it, we say it and he said when you give those things and it goes. Why do we think regulation will happen off of the back of a rise of this thing happening? Three things that happen here. One, what happens is that there's more people going into these things. If there's a scam that happens, or people are being exploited, because there are so many people, it becomes a talking issue. Individuals make it a voting point. You did not say that. I am saying that. That is why in Nigeria, now taxes are being passed in 2025 to make sure that governments can get these things. And much more viscerally, and this is the reason you can win a debate if you are persuasive. Much more viscerally, this is the reason why a Egyptian stock exchange is also engaging in these things. These are government power startups, which means with this, you can actually tax people and get money. So this is not just a profit that goes away, this is profits that governments can actually get.
The problem with the rise is that you're creating an environment where cryptocurrency becomes important, which means you're financially excluding those who cannot try and engage that environment. Those who try get scammed, and that's the problem.
But that's the problem. Just because there's something you don't know about doesn't mean we are excluding you. It means you need to make an effort to equally enter. I think the language you're using is like really tricky and doesn't speak to the spirit of the debate, and I could probably respond to that more. And why do we think this is important? For the individual, and these guys only see one thing on that Twitter. They tell you that it is to sustenance. I don't really extend to these individuals can like invest so much that they sustain off of that unless you're already rich. But we won't touch that, that's for them. What we say is that one, protection against inflation. Most African countries, Ghana cedi, Naira, the Zimbabwean currency, etc., are ones that are fluctuating and very volatile. When individuals invest in this system that are pegged to much more stable stuff, it means they can protect themselves against currencies and economies that are really terrible, that will make them lose money. Second thing that we'll talk about equally is about individuals who live in states that are being controlled by stronger people. For example, when you live in a dictatorship like Tanzania, where Samia Suluhu is killing individuals, or you live in Nigeria where Tinubu is literally failing, or in Somalia when there's no government, these are easy ways that you get to access the financial system that comparatively you wouldn't have gotten and not getting on a large scale. Why do we think the debate is extremely important? And panel, these guys don't engage in the debate. The debate is about financial assets that include crypto as well. There are three other things that nobody talks about. One, bonds that are issued by governments that do not exist on any crypto platform that you did not say. Second thing, things like commodities, etc., that they do not talk about. Do you know why this is good? When a lot more individuals buy governmental bonds, buy stocks for companies, it means startups have much more money to be able to grow, which means that the jobs they are talking about are ones that we actually feel in the mechanisms for and actually get on our side. We think we holistically approach the debate for closing opposition, and there's no reason we do not.
Thanks to our popular line speech. I welcome the Calvinist Script to the
Alright, so panel, the entire debate was seen as if whenever you invest in crypto, it's an automatic goal, an automatic entry in terms of profitability, right? So before I engage in our case, I need to have some bit of rebuttals on this side of the house, right? Right, starting off with the PM. Starting off with the leader of opposition, right? They said there is need for regulation because they feel like whenever something is overwhelmed by those who want to participate in it, so there's need of regulation. Then with that statement, they miss the shot because they are introducing fiat power as if they have that right in this motion. They don't have that fiat to introduce policies, right? We feel like regulation is right, but if you are into regulate into this motion, we think there is some loss of understanding there. Then there was this issue of choice. They say there will be choice between whether you need to invest off the electronic means or on the electronic means. The issue is not about whether you invest electronically or not, right? But the issue is about, do we let the investment continue or not? That's the issue in this house, right? So we cannot let the investment continue. While least as Africans, we are not well educated in the systems of cryptocurrency. Remember, the info slide clearly showed us that retail investors, they are non-professional. We need professionalism first to set in, which was spoken by the government. We think they had a point in saying that there is need for Africa to have knowledge first of how the e-crypto works like. I think they had a point in that, right? Moving on, the deputy leader of opposition said that there is the participation of the big boys, right? We are not worried about the big boys, but we are worried about the individual who doesn't have money, like Elon Musk. They claim that the big boys will continue to invest in cryptocurrency, right? Right. I need also to touch on the issue of accessibility. Yes, accessibility is guaranteed, but there are three things needed to be understood in this motion, right? If you are going to invest in crypto, right, there are three people involved, right? First, we have the owner of the services, right, which is the broker. Then after the broker, we have the platform in which you are going to trade the crypto. Then there is you, the retail investor. So there is manipulation along the way. If you are well vested with the investment in crypto, you already know that the broker can actually manipulate the market against you, thereby losing your own funds in this crypto issue. So we, as the Kenyan government, we think that it is necessary for us as the House to oppose the rise of retail or crypto investing in Africa, since there is high levels of manipulation from the broker itself and the service provider. Yes, you can go.
Panel, we will not be insulted in this debate. We gave mechanistic and structural reasons as to why socialization, regulation, and competition, as well as why...
Okay, thank you. I get you. You have your time, but you failed to prove what you were saying. You just said there's need to implement policy. We think that is very detrimental in this debate, right? So, moving on, we need to, let me dwell much on my case. There is potential risk. How does the risk come about, right? You are going to invest in crypto. You are not going to access it via the bank. Most of the banks, they do not, in Africa, most of the banks, especially where I come from Zimbabwe, if you want to invest in crypto, you don't go to the bank. You need to go to someone in the street, the agent, which is linked to the broker. The agent will at times not give you the actual amount that you need. There is a lot of scamming going on in retail investment. So we feel like, as in Africa, it's not yet the good time for us to let the retail investment go like higher. We feel like it's very much profitable to Africa that we oppose this rise of retail investment, right? So, with this risk involved, whether you are scammed or not, in Africa, if you go to the police station, you are in for fire, because there is no actual regulation right now, as we talk right now. There's no actual regulation that regulates these apps that we have here, the platforms in which we can trade the cryptocurrencies and other commodities that are out there, right? So I think there is potential risk of scamming between the investor and the broker itself. Remember, when you are investing in cryptocurrencies, you are not just investing and look back. You have to trade you yourself into the Binance or either the crypto or either USD, Euro USD, all those things. They need your own monitoring. So there is actual high risk, right? So moving on with our case, I think when it comes to this side, they were proving to the House that there is profitability guarantee. But to me, there is no profitability guarantee. Why? Because the crypto itself, when we say we are trading crypto, it's not an issue of putting money, then sell to somebody feasibly, and that person will buy or your own position, right? When you are trading crypto, there are things involved. You have to open a buy or a sell position for your own capital which you have invested in your own account, then the decisions in the capital, in the crypto market, they are not based on you or the broker. It's based on whether the buyers or the sellers in the market, which of the two is actually having more power over the other. So when you invest in crypto, there's no guarantee of profit, because if you place a sell position, then the buyers in the market are overpowering the sell. Then it means you are going to run a loss. I think with that I will make a propose. Thank you.
Thanks. We're going to go for the next speech. We'll open the chief of the debate here.
Okay. So the first part of my speech is going to be me weighing above opening, because to be fair, they do say a lot of the things, and maybe they do feel like we are stealing their arguments. So I'm going to be quite specific in the ways in which we analytically extend off of them, and the extent to which our analysis is much more persuasive, and the extent to which our analysis is much more weightier, and for that reason we should place above them. The first explanation would be the impacting of what you get from the latter part of the blue speech. And this argument is independent of cryptocurrency. This explains why more people engaging in retail investments is holistically a good thing. And what that essentially proves is that even if it is true that there are certain people that might be duped off of the back of cryptocurrency, there are certain people that might have some gains off of the back of cryptocurrency, this particular piece of impact proves to you why in the long term there is net utility for a vast majority of individuals in a world whereby more and more people engage in retail investment. And there are three things I want you to look at here. First of all is stocks. This is quite crucial. The law explains to you that in a lot of instances, the extent to which companies can be able to expand, the extent to which companies can be able to create better products is when they have access to capital. But the problem is that the multiple ways in which they can get access to capital is usually limited in a vast majority of instances. Because one, it could be in the forms of loans, which are a liability to you as an individual, because at the end of the day, you have to pay back those loans even when you don't have the money to. Stocks are really good because it means that the extent to which companies are now able to get access to a huger pool of resources is something that is significantly higher. And the reason why this is something that is essentially true is that if we have more people engaging in retail investments, which includes stocks, it means that more people are buying shares of companies. It means companies are having much more capacity. The implication of this is one, there is better products that exist in society. But then secondly, the capital tax is something that government can then get access to, which means that if you are talking about taxation as opening proposition, this is the mechanism that proves to you why you can get access to that taxation. Why is this something that is important? Even if certain people get duped, or even if there are certain bad things that happen in our world, because the government have relatively larger budget, it means that the country is significantly better in terms of dealing with certain things, like one, if they want to deal with the crisis, but then secondly, the extent to which they are able to invest in certain things like financial structures, the extent to which they are able to invest in certain things like education, hospitals, and all of those things, that in the long term are substantially better. What is the implication of this speech? It means that more people engaging in retail investment is an essential good for a lot of individuals at the end of the day.
And I'm like, this is me conceding every single thing they say, so that they don't say that, oh, we are not like we are being disingenuous. This is me conceding to every single harm that they preach. We explain to you why this is essentially still a good thing in the long run, because there is a net utility at the end of the day. The second form is bonds, usually issued by government. Recognize that there are specific circumstances under which the government issues those bonds. And the law explains to you that usually the government needs access to that money. When you have much more people engaging in retail investment, it means that when you issue a bond, more people can buy it because more people are interested. The comparative one is that if there are less people investing, government will issue bonds and they will be at a loss. It means that the extent to which they can be able to solve problems is something that is relatively less. I think right now, open opposition should probably be satisfied because these are not things that you hear from their speech, and these are not things that they tell you completely in their speech, and we have been very, very specific with the mechanisms. We have impacted specifically what the blue gave to you in the speech, and the extent to which is something that is very crucial, and the extent to which is something that should be in the debate in that regard. Before I proceed and become petty in the debate, I'll take opening.
Explain on your side why specifically in Africa it's okay to let people get scammed and economically excluded for the sake of betterment of crypto and retail.
Yeah, so that's what I'm about to do, don't worry. So first of all, let's understand the conversations of scams and the conversations of people getting left behind. Opening government says that when there is a rise, what usually happens is that you exclude a couple of individuals. The way in which opening opposition engages this particular thing is to explain why people would still probably be locked out, or people would still probably not get access to all of these things equally in their world. And there are specific mechanisms that they use. First of all, they say that the alternative or the comparative is a world whereby you use traditional means instead of retail investment. First problem, there is no explanation as to why traditional means do not form part of retail investment, essentially, provided that there are still individuals that issue bonds and there are still individuals that issue stocks. But I think this is something that is quite crucial. And pay attention because you get this specifically from Luno's speech. Luno explains to you why in all instances, even when more people are not investing, people would have the interest to want to invest, even when their peers are not investing. There were specific mechanisms to prove why this is true. First of all, is that they can see that outside of Africa, there are people that are making big money. Specifically for an average African person that is not the most economically sound. When you see these things, you are very, very interested and you want to be a part of it. What that essentially means is that in all instances, people uniquely still have the interest to engage in it, even when the investment is relatively not high. The reason why it is much more worse and detrimental on your world is that these people can easily be duped off of the back of the interest because there are fewer companies that exist in the space. That is when opening opposition's conversation of competition becomes much more relevant, because by proving to you why people would still have the interest, it proves to you why there is a higher propensity for these individuals to get duped, and for that reason there is a need for the competition. But the extra layer of that interest proves to you why when companies recognize there is an interest, there is more competition, meaning that the extent to which they are able to make their products better and the extent to which they are able to improve upon the lives of individuals is something that is comparatively way much better. What is the implication of this speech? By proving to you why interest still exists on their world, it means that scams still exist in their world. But those scams are relatively better because at least in our world, even when the interest exists, the competition makes sure that the interest is checked. But the law goes a step further, because the law does not just say that there is political incentive. He explains what actually the political incentive is. And this seems simple, and it seems that it should be intuitive. But if you intuit for them, then you are all of a sudden creating analysis for them, because sometimes intuition forms part of analysis. The law explains to you why voting is very crucial to a lot of political parties. And when much more individuals are engaged in a specific topic, it becomes a voting matter. It means that the extent to which there is much more regulations, all of those things, is something that is better actualized on our world. And again, I'm being very fair. I'm not saying that they did not say that there is not political incentive. I'm saying that we explain what the political incentive looks like and how it explicitly plays out, which means that the extent to which that particular piece of argument can be persuasive should be credited to us. It means that at the end of the day, there is better regulation on our side for the scams, for the bad things that are happening, as compared to their world where it's relatively much more less. I think I've been very thorough in today's debate and taking all the best case scenario so that no one says that we do about it.